Good morning, good evening, good afternoon, trader Steve here at Logic FX Trading, and welcome to this introduction to the Competent Trader, which is my training and mentoring program. Now, this first video is called The Big Picture because that's exactly what it is. Over the next 30 minutes or so, we're going to take a step back from the focus on day-to-day trading and kind of take a bird's eye view of what it takes to be a successful trader. Now, since your goal is to make money from trading, it's essential that right from the start you know what you're striving for is achievable, and that's what we're going to look at here. What knowledge, skills and mindset you need to have or to develop in order to make your living from trading. Before we start, I just want to make it clear that I'm not here to convince you of how easy it is to trade or to sell you my training and mentoring. Hopefully you're watching this because you already know me from my online presence and you kind of arrived at this video because you want to know more. The truth is that learning to trade can be difficult and you'll have to work hard at it to be successful. Having said that, once you get it right, it'll be well worth the effort you put in. You'll be able to identify high probability trades and become much more adept at making profit from them. Okay, so let's go. We can break trading down into three distinct areas or skill sets. First, we'll look at trading psychology, which is about fears, motivations, expectations, and generally getting your brain working for you rather than against you. Next, we'll examine trading analysis, where we identify high probability trades by forecasting what price is going to do next. And then finally, we'll cover trading strategy, where we use personalized trading rules for opening and closing trades to maximize profit and minimize losses. And that's trading in a nutshell. Now, don't worry if those terms are new to you. By the end of this video, you'll know what I mean by all three and how they combine to form a very stable and reliable platform to build your success on. So let's spend 10 minutes or so in each area and hopefully you'll see how they encompass everything you need to know to become competent and successful at trading. Let's start with trading psychology. I've heard successful traders saying that psychology is not important and they don't use it. Well, of course they use it. Psychology is the study of us, or rather our brains. It's about who we are and what we think and what we do. It's also about how we communicate ideas and how we learn. But most importantly for you, it's about controlling your trading fears and helping you stay motivated when the going gets tough. My interest in psychology started 30 years ago when I was training to be a mine manager in the South African gold mining industry. Right from the start, I had some great mentors who made me realize that managing hundreds or thousands of people would require a great deal of knowledge and understanding of what makes people tick. And before we understand others, we need to understand ourselves. So that's where my love of psychology started and why I know it's so important for the learning process and for the application of knowledge. Remember, it isn't knowledge in itself that creates success, but rather the application of knowledge. You see, trading isn't like painting by numbers, guys. It isn't as simple as saying prices reach a certain level and therefore it must change direction. It's much more complex than that. But just like riding a bike or surfing the waves, once you get it right, you'll never forget how to do it. You'll have learned a skill for life. There'll come a point in the learning process where you'll just get it, where you'll know that you know enough to turn the tide in your trading. You'll learn to stop blowing your account, you'll protect your capital, and eventually you'll make money through competent trading. But even at that level, just like a surfer, you'll not catch every wave and you'll fall off some of the ones that you do catch. At that point, you simply swim back out to the waveline and you wait for the next big wave. And that's okay. It's a normal part of trading. It's essential for your learning and development to know what the norms are. Now, every successful trader has learned to control their emotions, both the positive ones and the negative ones. They don't get overly excited about winning trades and they don't panic when they lose trades. They trade systematically. They've learned a set of rules and guidelines for analysis and they've developed a personal trading strategy which works when it's applied logically. In short, they don't allow emotion to affect their trading. So by understanding a little bit about psychology, you can greatly increase the speed at which you learn and control your emotions so you can trade logically. So you can see why I include it in my training and mentoring. The purpose of the Competent Trader is to give you the knowledge you require to trade, as well as the mental skill set you need to apply it. Okay, so let's spend 5 more minutes on psychology before we get on to some charts and have an overview of trading analysis. Before taking on any task, we need to consider 3 essentials. What is your goal? What is your motivation? And do you believe that the goal can be achieved? Now, once you're sure of the answers to that, you can build a plan to get you from where you are now to where you want to be. Now, first of all, what is your goal? What do you actually want to achieve? And what is your expectation? Now, we'll look at this from a trading point of view as we go along, but for now, it isn't as simple as saying I want to make lots of money. Money's a byproduct of success, so your goals must be success orientated, and the focus of your thoughts and actions must be on the process of learning. Put simply, once you know what you're doing, you'll be in a position to make money. Until then, you'll lose money, and that's a fact. But don't worry, the first thing we'll do is stop the erosion of your hard-earned capital, and then we'll work out where you're going wrong. The big goal of learning has to be broken down into chunk-size, achievable tasks, which are about the process of becoming successful. They must not be about making money in itself, because money's subjective, and people determine their success or failure by how much money they've made or lost. Forget about money for now, and focus on learning. You see, my view on learning is this. If you were taking guitar lessons, would you expect to earn money as a guitarist? I don't think so. At least not until you had reached a certain level of competence. And what about a degree? Would you expect to be paid for being an engineer or a doctor while you were still at university? No. So why do people try and earn money trading before they've learned how to do it? Probably because so many people tell them it's easy. The brokers, the guys selling beginners training courses, and the guys selling signal services will all tell you it's easy. They want to make money from new traders, and it doesn't matter to them what your success rate is, because tomorrow someone else has signed up with a new bunch of cash. Trading even looks easy, but I'm telling you now, it isn't. It requires a great deal of knowledge, skill, and mental strength. And by the way, all the beginner stuff's all freely available, so don't be paying for it. Okay, let's move on. The second thing we need to consider is motivation. Why do you want to spend all the time, effort, and money that are required to achieve your goals? Yet again, guys, it mustn't be about money. Money isn't a motivator in itself, but rather the freedom, the security, and lifestyle that making money by trading can give you. This is about creating strong motivational images that you can refer to when the going gets tough. There'll be times when self-doubt creeps into your head, and if you don't nip it in the bud, it'll take over. Next thing you know, the people who you rely on for support will start doubting what you're doing. Without strong motivation, you're very likely to give up. Simply put, you'll need to remember the reasons why you decided to start trading, and not just the images. You have to remember the positive motivation that are attached to them. The last thing we need to consider at this point is belief. Do you believe you can become a professional retail trader? If you don't, then you're destined to become one of the infamous 90% of traders who lose their money. If you don't believe you can do it, then you'll give up. So where does belief come from, and how do we maintain it when we go through a period of difficulty? Let's think about what you've achieved in your life up to now. Things that I know that you've been successful at. Things that I know are really difficult, but I guarantee you, most of you have forgotten how hard you had to work to achieve them. Let's consider your ability to read and write. Take your memory back to when learning the alphabet, learning to spell, basic grammar, creating simple sentences, right up to the point where you could write essays and pass exams. For many of you, you've learned to do it twice because English is your second language. Each of you will have a whole host of achievements, and they're what you need to think about anytime you doubt your ability to get trading right. Trading isn't rocket science, so it's well within your ability to get it right. At the same time, it isn't easy, so you need to put the work in to learn how to do it. So why am I talking so much about psychology and goals and beliefs and motivation when all you guys want to know is, how do I trade? Here's why. You see, the reality of trading looks a lot more like this. Anyone who's traded for any length of time will recognise this as a real route to trading success. Most of you should be able to identify approximately where you are on this journey. You may be completely new and riding along blissfully unaware of the big ditch right in front of you. That's where the rest of us blew our first account. Perhaps you're at the last ladder and you simply need to fine-tune your trading strategy in order to keep from slipping back down each time you feel close to getting it right. You might just need me to help you fill in the blanks or to motivate you across the line. Guys, the journey is what it is, and I can't travel it for you, but I can provide you with the cable car, the ship, the bridge and the ladder in the form of knowledge and motivation. Okay guys, let's move on and spend 10 minutes or so looking at trading analysis so you can see how we forecast where prices are going next. Now, analysing the charts can be done in various ways, but I found the only one which works consistently is structure analysis based on Elliott Wave principles. Now, this doesn't mean we completely ignore fundamental news, but rather we incorporate it into our decision making in conjunction with structure analysis. Now, we can see how to do that as we work through the course, but for now let's stay focused on our big picture. In the 1930s, Elliott studied 75 years of stock market movements, and he concluded that while prices look random and unpredictable, in reality they actually follow predictable natural laws that can be measured and forecast using Fibonacci numbers. We'll look at those later on. Now, over the years, Elliott's findings have been studied, refined and added to, in particular by Frost and Prechter, who in 1978 published this book. It's called Elliott Wave Principle, and you'll need to get a copy of it and study it. You can pick up the latest version on Amazon, and there's also a free online version available. I'll post a link to that below this video. Now, naturally, I'll teach you the principles, the guidelines and the rules as we progress, but I'll not waste your time explaining why Elliott came up with them. You'll need to read the book for that. Now, as I said earlier, it isn't knowledge in itself that creates success, but rather the application of knowledge. So what do I mean by that? Well, simply this. Elliott's principles are the basic rules and guidelines that we use to interpret what's happening on the chart. The skill is the interpretation. You'll not make any money by knowing the rules alone. You need to know how to apply them, to interpret what you're looking at and make a correct forecast. Now, I'll say it again, this is not painting by numbers, guys, as so many people out there seem to think it is, especially the people who seem to see butterflies everywhere. When you understand structure analysis, you'll not need butterflies. They're simply training wheels, or stabilizers as we call them in the UK, which people mainly use incorrectly. Now, most traders don't have difficulty learning Elliott's rules and guidelines, but they do struggle to identify waves and structures correctly on a chart. And of course, the next degree of complication comes when they try to identify a structure while it's still in the process of being made. That's the skill that will make you a lot of money, predicting what's going to happen next and knowing how to successfully trade it. You'll need to practice using wave principles to correctly identify structure, but once that becomes second nature, you can start to forecast what's going to happen next with a high degree of probability. Now, while structure analysis can be used to forecast any stock, index, commodity or forex pair, we have to be aware that each of them have their own particular way of moving. They have their own personalities. You see, the charts are a mathematical representation of human nature. The market is made up of human beings making decisions based on their needs and emotions. The good news is that this means that at certain times the chart shows what's going to happen next with a high degree of probability. That is, provided we know how to interpret what's happening. So let's have a look at a live chart. Okay, finally we're on a chart. Whenever I start to analyze any particular instrument, any pair, any stock, any commodity, or whatever it is that you want to trade, I always start with as big a picture as you can possibly get to give you an overall view of what's happened in the past, because that gives you an indication of what may happen in the future. Now here we have the Japanese yen, or the dollar yen chart on a monthly basis or monthly time scale. And if we look at this, it kind of starts back, that's 94, so you know, around about 92, somewhere like that, this 93, this information starts right up to the present day, 2017. Now if I look at this, what I see is a correction. But you might say to yourself, well, how do you know it's a correction? What makes you think that? Well, it's simple as this. What I do is I like to go back and find as much information as possible. And I've gone into Google and looked this up. The Japanese yen against the dollar floated somewhere around 1970. Prior to that, the exchange rate was fixed. And it started up around here, around 300, which is, say, 1970, 300. And we've got an impulse downwards with corrections in between. And then we get to the bottom here, and we can see that this is around 1995, which is there, 1995. Then there's a peak and a trough, and the trough's 2000, which is there. We can see down here, we're looking down here. And then it comes up again, and it comes down, and then it comes down. And this chart, 2010, it ends in 2010. And since then, the last 7 years, we've had this impulse up and a correction of the impulse. So if I add this information here to this particular chart, and obviously we've got to squash it right down to do it in order to get the 300 in, there's 300 there. What we had is from 300 we had a move, a correction, a move, a bigger correction, a move down, and something like that. And that was our impulse coming down. Now we're having a correction, guys. All of this over the last 20 years is a correction. And once you know that, then it can influence how you see what's happening. So if we bring this back up again, we now know this is a correction. So we start to draw trend lines on it. And the first 2 points we have, or the two major points we have, are there. So there's the bottom of our correction. So where's the top of our correction going to be? Well, obviously this is going to be one of the points. So let's just get our parallel. And we'll do that. And then I like to just draw that in. Like that. And go back to there. And we'll just take that out of the way. So there is a depiction or a forecast for what's going to happen to price in this chart over the next coming year, let's say. Could be 6 months, could be a year. Does it have to do what we think it's going to do? Does it have to do that? It doesn't have to, and it certainly won't, probably won't go in a straight line, guys. Remember, these are monthly, these candles each represent a month, but it gives us a direction, it gives us an idea of what's actually going on. And what we can see here is an impulse, a correction, and an impulse. All we don't know is where is that going to end? Let's take that out. Where's that going to end? Because it could end there, it could go to there. Remember that this is, simply put, this is an A, B, C. Okay, and that C could end anyway. Will it end there? I really don't think so, because that would give us a completely different structure altogether. I don't think that's the structure that we're getting. I think we're getting this. Now, we don't trade at this level, so it doesn't really matter, guys. It's just to give us a big picture, give us an overall. This is like the picture on the box of a jigsaw. You know what's happened in the past. You can see where it's going. Now this particular shape that I just drew there, you'll see it everywhere, and it's very, very important. You get an impulse, we have a correction of sorts, and it doesn't have to come as deep as that. You can have an impulse and a small correction, but they all look the same. And that's what's important, guys. They all look the same. So the moment you see one of them being created, for example, this, when this came up to here and started doing this, what's going to happen next? You get your correction. It comes down, decides to go back up again, you get your correction. It goes up, it comes down again, you get your correction. And at each of these points, guys, you have fantastic opportunities. There we have another one, a correction. Comes down, a correction. Goes up here, it's not such a defined one, but a correction. It's come down here, it's turned. What are we getting? We're getting a correction. That's probably not the best tool. So, from what we've seen so far, where is this going next? So when it starts to look like that, if we zoom in a little bit in that, what have we got? Same thing, guys. Exactly the same thing. We've got an impulse. We're getting a correction. Where's it going next? Is it going down there? No. It's going like that, and then it's going to do that. It might come to there, it might go on up, it might just come to there, guys. But that is a huge trade. Now, it doesn't mean you can't trade these. Remember, this is a monthly chart. But understand what's happening, understand where it's going, and then you can start to amaze people by knowing where it's going to go before it does it. Right, now we're going to stay on the big picture, but I want to show you another chart with that's similar. And let's make sure I'm getting the right, this one. Now look at this one. Same thing, guys. This correction's a bit longer. This is an A, B, C, D, E. The other one at the moment is an A, B, C. It could turn into an A, B, C, D, E. But remember this, for it to do that, you're looking at the next 5 to 10 years. So don't be worrying about that too much. Look at this one. If we draw a trend line in there, and another one across there, if we put our parallel, remember, guys, this isn't paint by numbers. These things don't always exactly line up, but that's not too far away, is it? This is a chart I drew back in February this year. Hopefully we can see it. There we are. Let's enlarge it a little bit if we can. It's the same thing, A, B, C, D, and at that point we had come up and we'd made a correction. Up and made a correction. And my forecast was long. Let's see what happened next, guys. Not bad, eh? There we have it, and it's actually broken out now. That is 5 months ago I made that forecast, guys, that the price of the euro against the dollar was going to go at least to that line. And now it's broken out, and now we forecast again. Has it broken out, or do we adjust this and it's going to come down again? Or is it going to go? But that's another story for another day. Okay, having seen those two, let's have a look at this one. This is silver against the dollar, price in dollar on the monthly chart. And can you see anything there that we've been talking about? What about this? What about an impulse, a correction? So what's going to happen next, guys? I mean, it's not rocket science. What's going to happen next? That's what's going to happen next. And that is a huge, huge trade. Could you imagine buying silver down here somewhere and holding it the whole way through that? You probably would have chickened out somewhere around here. But what a move up, guys. What a move up. That is what we're expecting. When is it going to happen? We don't know. We don't know. But it will happen, because the structure tells us that that's what will happen. Can this go lower? Possibly. But to be quite honest, It's come down low enough. It could come down a little bit more, guys. I actually think that this has started its move up. It may hang around, because if we zoom in on this, if we bring this down to, say, a daily chart, and we see that last little bit of the big correction down, and this is what we're looking at. This is the tiny little bit that was at the end. And what do we have there? You see it? Impulse, correction, which is now going a little bit further than actually we thought. Around about here we were expecting it to go. Here I expected to go, and then it started to do this, and I thought, okay, well that's a 1-2 out of the correction. It's going to go, but since it's come back down again, guys. And this is where the skill that you're going to learn comes in. When it doesn't do what you expect it to do, well, you don't fret. You say, right, okay, it's turned, it's going down, let's trade it down. It's turned, let's trade it up. It's turned, let's trade it down. Now it's turning again. But the overall view, at some point, let's take some of that out, guys. At some point, this is going to complete as well. The same as the rest. A, B, C. Okay, A, B, C. So I've just given you there a potential huge trade, but don't jump into it, guys. We don't know if this downside's complete. But what I'm saying to you is, at some point over the next few months, probably before the end of 2017, something's going to happen that's going to make this take off. Might come back down again from there to complete this. Okay, so we've seen in a few short minutes that the structures are the same. Now there are a lot of other structures, guys, that we can pick out, but the point I'm making in this video, and remember we're doing a big overview here, we're not going into small details. The big overview is that you can see where it's going to go next. The trick is determining the turning points. When is it going to turn? Because if you get it at the right point, if you find it at the right point and you get onto it, and you manage to hang on to it, you can do one of two things. You can either get in, get out, get in, get out, get in, get out, or you can get in and stay in, guys, and let it run. That depends on your bravery, and it also depends on your trading strategy, which is what we'll talk about next. Alright folks, let's now focus on trading strategy, which is the business end of trading where money's made and lost. Just like every other trader, you'll have to develop a personal trading strategy which should reflect your goals, your capital and your personality. Your success or failure as a trader will be determined by your ability to balance your expectations with your circumstances, and that's where trading psychology will start to reap benefits for you. The process of developing a personal trading strategy should start by creating a big picture. What are you trying to achieve? How are you going to achieve it? And how long is it going to take? So what does that entail? Well, first you need to write out a trading plan for the coming year. Make sure your targets are realistic, rewarding enough to motivate you, but not so big that you become disheartened if you don't achieve them. Remember, from a psychological point of view, it's better to overachieve than underachieve, so make sure your targets are realistic. Next, you'll have to decide which trading style suits your personality. For example, do you want to be a scalper, an intraday trader, a swing trader? Whichever style you adopt, it has to produce the results you've planned for. And of course, you'll need to manage your money in such a way that you can ride through a streak of losing trades without either blowing your account or losing so much that you give up hope of recovering your losses. Once you've done your analysis and forecast where price is most likely to go next, you have to wait for price to do what you expect. Only then do you consider opening a position. If price doesn't do what you expect, then leave it alone and look for the next opportunity. Never chase price action, because that's how you'll lose your account. If you were a surfer, you wouldn't swim after a wave you'd miss. You'd wait for the next one to come along. Every thought, idea and decision you have from the moment you consider opening a trade until the moment you close it is called trade management, and it's the final key to successful trading. So let's have a look at that process now. Here we have the variables you'll have to consider anytime you want to open a trade. First we have our entry point, the price we open a position at, which is setup dependent. We'll learn various setups as we work through the course. Next we have to consider our exit point, the price we intend to close the position, which of course can be incremental, target 1, target 2, etc. Then we have to consider the stop loss. At what price do we decide the trade isn't going our way? Now, as we'll see in a moment, these three variables are interdependent, and the trade will only be worth taking if the ratio between them is at least 1 to 1, and preferably a lot greater. Now that's what we call our risk to reward ratio, how much money we're risking versus how much we stand to win. And finally, we have to decide how much money we're going to risk on the initial position. Now this amount should be predetermined by your money management plan. But as the trade develops, you can decide to either add to your position or subtract from it. Effectively, you can multiply your winnings or divide your losses. So let's have a look at how this pans out on a chart and see how the decisions we make can get the best result possible for any given price development. Here we are back on our Euro-Dollar daily chart. Now we know we have a correct long-term forecast in this, so it will give us a great opportunity to see how much work we still have to do in order to turn a profit and why our personal trading strategy can affect the outcome. Now, just to remind ourselves, here is the daily forecast that I made back on the 28th of February. If we just go in and have a look at it, we can see that it looks very, very easy. We get in down here, our forecast is there. We let it run and we've made lots of profit. Well, in reality, it's not that easy. So let's go over to the 1 hour chart and have a look at this same setup on the same day. Now here we have the 1 hour chart. That line is that one, and that line isn't visible because it's back over there somewhere. So we've got a new trend line which is on here, and we're looking for a breakout of this. So if we progress this, it looked to me at this point it looks short, but remember I'm looking for a huge long trade, so I'm not looking to trade this, guys. Starts to come back up again, it goes. I'm looking for a break of that line, and it's going and it's going and it's going. And when you post a chart and say we're looking for a long trade and something like this happens, guys, loads of guys jump in and start saying, hey, you got it wrong, it's going down. I haven't got it wrong, because at this stage I haven't even considered opening a trade. So it's moved on, This is the next day. It started to turn up, but I'm still looking for a break of that, guys. And at this point, I posted another chart, only I think it's a 1 hour chart. 1 hour chart, and we've drawn it in, and there's the point there where we were at, just there. And I've said that I'm still waiting for a long trade all the way up. This is an update on yesterday's chart. I'm expecting a huge move up to the channel top over the coming months. We're not looking at a 1 hour, 2 hour, 2 day trade here, guy. Over months we're looking at this move up. If we can get into it as early as possible, it could give us some nice profits. That's an understatement if I've ever heard one. So far it has been correcting the initial wave of the long move up, and it's come down to 61.8 fib, which is a nice zigzag down. It may come down some more to test the 78.6, but I'm not interested in that because it's not obvious and therefore it's risky. I'm more interested in waiting for the long trade setup and trying to ride this pair all the way up. It will be worth a few false starts to get into this, i.e. small losses or break-even trades. That's part of the game. Okay guys, so in that statement we've made it quite clear that we're not interested in this going down. We've said that it might still keep going down, but I'm not interested in it because we don't know if it's going to keep down. It's possible, but we don't know, and we're never going to trade something that we're not 90% sure is going to happen. So let's see what happens next. We're still interested in the long trade. By the way, at this point we now have a trend line on this. So let's start. So it keeps going down, it keeps going down, it keeps going down, which is what I said it might do, which is the reason why I didn't jump into a trade there. Keeps going down, keeps going down, keeps going down. Now, at this point it flattens out and it starts to move up. If you ever saw me doing this, there's a trend line, price is moving here, and I say wait for a breakout and a correction. And once you get that correction, then you're looking for a trade up there. This is one of those situations. We've had a breakout. It's not a fantastic breakout, guys, so we're not looking for a fantastic move back down, but it's one of these we're looking for. So as it develops, it moves up. I'm in. That is my signal to get in. So I'm in at that point. Where's the stop going to be? Well, it's going to have to be below there, isn't it? So that's our entry point. There's our stop loss. Let's move it on. It kept coming down a little bit and then it moved. Okay, now we're moving away. It's come back a little bit more. At this point, unidirectional. Remember, our target's way up here somewhere guys, so there's no problem with that. But remember, we also want to break out here, but we want to get into it as early as possible. It is entirely possible that this is going to come up here and come back down again, but what we do then is that we move our stop loss to 0. So in other words, even if the price comes right back down on us, we're not going to lose any money. So what happens? Takes off. So at this point I'm going to move my stop loss up just to protect that little bit of profit we've made there. Shoots away up. Now I'm confident. We're going. It's come back down. It's taken us out. So there's our profit from there to there. We've made some profit. And now we start the process over again. We had that. Now it's coming from there. It's too close to draw it. It's going down, it's going down, it's going down. Now we're waiting for a break of this. We had a break, but it didn't meet my rules. Remember, there's indicators we look at as well here, guys. And there's a time frame. It went up and it came back down again. We would not have been fooled by that. And in actual fact, this can now move up to there. We're now looking at this. It's come down, it's come down, it's come down. We're still looking for a long trade, guys. Do you remember this? Do you remember what we looked at before? We've got an impulse. What do we get? We get a correction. And then we look for another impulse. That's what we're getting. We've got an impulse. We're getting a correction, which actually looked really, really nicely long. And we're waiting for a proper break of this, guys. We're waiting. This is days. We're waiting. We're not jumping in. There's our break. Stop loss down there. Bang, bang, bang. Coming back down again. Still too tight to move or stop up. Let's go. What's happened? There we go. Now we can move it to 0. And it's away. Now we can consider moving it up a bit more. Not too tight. Because it's moved this distance, we're going to get a correction, guys. That's probably too tight, to be quite honest. Was too tight. And away we go again. Remember, we know it moves like this. 61.8. So you don't want to move it unless you want to. This is your trading strategy, guys. If your strategy is to jump in and out and in and out, well then, yep, take it up to there, get taken out there, and yet again, get back in again. Where do you get back in? You get back in there. Now the whole point, because that's the break of our trend. Now, the whole point of this all starts from your big picture. This all starts from knowing that we're looking for a big, long trend upwards. And this is trend continuation, guys. But you need to forecast the trend in the first place. If it doesn't go, it doesn't go. Look for the next one. But if it does go and you get the forecast right, this is how to trade it. Hopefully this presentation has achieved its purpose, which is to give you an overview of what you need to know to become a competent and successful trader. We started by looking at the importance of understanding a little bit about psychology, how it accelerates the learning process, and how you can use it to control your emotions in order to give you a stable platform for your trading. Part of that control comes from seeing the big picture, setting goals and developing a plan to achieve them. Naturally, there's a lot more to it than we can discuss in 10 minutes, but hopefully you can see the benefits psychology can bring to the process of getting you from where you are now to where you want to be. Next, we had a quick lesson on how structure analysis can be used to forecast future price movement with a high degree of probability. Of course, we can't trade at the timescales we looked at, but once we get into the fine detail of applying the rules, guidelines and measurements of Elliott-Wave principles, we'll be in a great position to predict future price movement on a tradable timescale. Finally, we discussed the importance of developing a personal trading strategy which balances your financial goals and expectations with your capital, your personality and your skill level. The key to developing a successful trading strategy can be found in the combination of skillful trade management and a disciplined money management. Ultimately, what we all want from this is an enjoyable and exciting way of earning money, which also allows us the freedom to make our own decisions about how we spend our time. I don't know any better way to achieve those goals than by trading, and that's especially true now that we have so many portable devices with which to access the internet. That's all we have time for in this presentation, guys. But if you're interested in finding out more about the Competent Trader or the mentoring that I offer, you can find the details on my website, which is logicfxtrading.com. I'm Stephen Nixon. Thank you for taking the time to watch this. Hopefully it was helpful. Goodbye.